JP Morgan Chase is by far the largest traditional bank in the US and one of the most well-known and respected banks in the world. Many people despise Chase because they are quote-unquote too big to fail, meaning that they can get away with nearly any financial mistake. But how big exactly is JP Morgan Chase? Well, at the end of 2020, JP Morgan Chase reported their total deposits and client assets to be a whopping $5.926 trillion. But just a decade ago, the bank's assets and deposits stood at less than half the current amount at $2.8 trillion. And whether you respect the company or not, this is an extremely impressive figure. And the man behind this phenomenal growth is none other than Jamie Dimon. So here's the story of how Jamie Dimon became the $5.9 trillion banker. Taking a look back, Jamie Dimon was born on March 13, 1956 in New York City to Greek immigrants. If you're familiar with European last names, you might have noticed that Jamie's last name Dimon is not a Greek name, but rather a French name. The family's original last name was actually Papa Demetrio, but Jamie's grandfather decided to change the name to Dimon in order to sound more French. His grandfather was also a banker who worked in Athens, and I guess he thought that sounding French would make him more trustworthy? I'm not quite sure. But anyway, going back to Jamie, it looks like he had a pretty nice childhood, as his father was an executive vice president at American Express. Jamie ended up attending the Browning School followed by Tufts University, where he majored in psychology and economics. During his time at Tufts, Jamie wrote an essay about the creation of Shearson through a plethora of mergers. At the time, Shearson was the second largest security firm on Wall Street, and Jamie's mother would mail Jamie's essay to Sandy Weill, who was the leader of Shearson. Sandy offered Jamie a summer internship at the firm, which would eventually turn into a 2-year stint as a management consultant. Jamie would end up returning to school though to pursue an MBA from Harvard Business School. It looks like Jamie was a star student at Harvard, given that he would end up graduating as a Baker Scholar, which means that he was in the top 5% of his class during both years of his MBA. In between his 2 years at Harvard, Jamie also picked up a summer internship at Goldman Sachs. Considering his education and all of these highly respected internships, I don't think you'd be surprised to hear that he had several job offers waiting for him when he graduated in 1982. These offers included Goldman Sachs, Morgan Stanley, and Lehman Brothers. But Jamie ended up choosing American Express even though they offered the lowest salary of the bunch. Sandy Weill had moved over from Shearson to American Express, and Jamie had the opportunity to work with Sandy again at American Express, which Jamie valued more than the higher salaries at the other firms. Between 1982 and 1985, Jamie worked as Sandy's assistant, and when Sandy left in 1985, Jamie would follow him to his next venture. Sandy had his eye on a failing consumer finance company called Commercial Credit. Sandy acquired the company and took it private and appointed Jamie as the CFO. Over the next few years, Jamie and Sandy bought a couple of smaller financial institutions that were in a much better state. This included Primerica Financial Services, the life insurance company A.L. Williams, and the brokerage firm Smith Barney. Following the acquisitions, the duo implemented a cross-selling strategy, which meant that each entity within the parent company would buy services from another entity under the parent company whenever possible. This minimized the total outflow from the overall company and vastly improved the financial state of the parent company. By the early 1990s, Commercial Credit was doing so well that Jamie took a stab at acquiring a failing institution called Travelers Insurance. In September of 1992, Travelers Insurance was on the brink of bankruptcy because Hurricane Andrew had just devastated the Bahamas, Florida, and Louisiana, which resulted in a massive influx of insurance claims. It was a rather risky bet though, as Travelers Insurance was not a small company coming in at $5 billion. But if they could stay solvent after the acquisition, the new company would be one of the largest financial services firms in the US. Jamie and Sandy would not only take the risk, but they would also take the name Travelers, as the brand was far more recognizable than Commercial Credit and Primerica. Around the same time, the duo would acquire Shearson for $1 billion, which is quite ironic given that Jamie was just an entry-level intern at the company about 15 years before this. All of this was just the beginning though, as Sandy and Jamie were about to create one of the largest banks in the world, and I'm not talking about Chase. In 1997, Travelers would acquire the famous investment bank Salomon Brothers for $9 billion. This was the second largest acquisition in banking history at the time. But the merger that would take place the following year would blow the deal out of the water. In 1998, Travelers Group made a deal with Citi Group to merge the two companies. Both companies were valued equally at $70 billion, meaning that the new firm would stand at $140 billion. And that's how modern-day Citi Group was founded. The chairman of either company, Sandy Weill and John Reed, became co-CEOs of the new company, and Jamie was appointed as the president of Citi Group. Jamie was only 42 years old at this point, and he was already the president of one of the largest banks in the world. But unfortunately, things weren't as good as they seemed on the surface. Sandy and Jamie had gotten into a bit of a misunderstanding. The story goes that Sandy was salty that Jamie didn't promote Sandy's children up the ranks of the company. Sandy expected Jamie to appoint his daughter Jessica as the chief of asset management and his son Mark as the leader of the Solomon bond business. Sandy was about to retire in the next couple of years, and the expectation was that Jamie would take over as CEO. But Sandy feared that if Jamie became CEO, his children would be left in the dust. So Sandy felt that he had to make a choice between his adopted son Jamie and his real children Jessica and Mark. Honestly, I feel like this was a pretty unfair expectation. I don't think Jamie was against promoting Jessica and Mark by any means. He just wanted them to rise up due to merit as opposed to family connections. Sandy obviously disagreed with this stance, and at an executive retreat, Sandy would ask Jamie to resign from the company. When the news broke that Jamie was resigning, Wall Street was shocked. Apparently, when Jamie stepped onto the Solomon Smith Barney trading floor after resigning, the 1,000 traders in the room gave him a standing ovation. Clearly, Jamie was a highly respected man in the industry, and there was no objective reason to fire him. It should also be noted that Jessica and Mark would end up leaving Citi Group, so Sandy's decision was utterly pointless. Jamie was unfortunately not able to become the CEO of Citi Group, but we all know that it would end up playing out even better for Jamie. Jamie didn't instantly get another job though. He would take an 18-month break from work and he would actually consider retiring. Jamie says that he was very open-minded about the situation. He had plenty of money, so money wasn't a concern. All of his children were quite young, so he considered staying at home and raising them. Jamie also received plenty of job offers from leading companies. Jeff Bezos actually offered Jamie the position of Amazon president. If Jamie had taken the job, he might have been Amazon CEO today, but Jamie decided against it, citing that finance was his bread and butter. When the opportunity to save a failing bank came up though, Jamie knew that this was his calling. Jamie took on a job at Bank One as CEO and chairman in March of 2000. At the time, Bank One was the 5th largest bank in the US, but they were getting crushed during the dot-com bubble. The bank started losing money in 1999, and in 2000 they would end up losing $511 million. So clearly, the situation was not good. The first thing Jamie did was buy 2 million shares of the company, because he felt that he would be more motivated to save the company when he had money invested. After that, Jamie went on a waste reduction purge. He cut relationships with bad partners, shut down the unprofitable online division, and he made branch manager compensation based on net revenue as opposed to total sales. Jamie was able to save $1 billion and make Bank One a respected financial institution once again, and soon enough, Jamie would land on the deal of his lifetime. In January of 2004, Jamie would negotiate a deal with JP Chase to complete a merger of equals. Citigroup had become the world's largest financial services firm, and the JP Chase needed the merger to compete against Citigroup. So they would agree and the two companies would merge in June of 2004. Jamie was originally appointed as the president and COO of JP Chase. However, once the CEO, William Harrison, retired in 2006, Jamie would move up to being CEO, and 1 year later he would become chairman as well. Unfortunately, the 2008 financial crisis would roll around the following year, and Jamie was at the helm when Chase was quote-unquote bailed out. The media often likes to paint Chase as needing the $25 billion bailout that they received, but this is really not the case. JP Chase was the strongest of all the American banks. In fact, they didn't even have a single negative quarter during the entire crisis. Jamie says that the only reason they took the bailout is because the US Treasury wanted them to. The Treasury felt that if Chase took the bailout, smaller banks who actually needed the bailout would feel more comfortable in taking it as well. Also, Chase paid back the entire amount just 1 year later in June of 2009. Around the same time, JP Chase also became the largest American bank, overtaking Citigroup. And with that, Jamie had become the largest American banker. This time, Jamie didn't get screwed over by Chase. In fact, he would be extremely well compensated and even become a billionaire in 2015. But unfortunately, he would be hit with a new set of problems. In 2014, Jamie was diagnosed with throat cancer, and he had to go through radiation and chemotherapy for several weeks. And just last year, Jamie nearly died after his aorta exploded. The most ironic part of this terrible experience was that when Jamie caught a taxi to go to the nearest hospital after feeling severe chest pain, the taxi driver drove him to Weill Cornell Medical Center, which was of course named after Sandy Weill. Fortunately, the doctors were able to repair his aorta with a 7-hour surgery, and Jamie was able to return to work the following month. Today, Jamie has until 2023 as CEO, at which point his term expires. He'll likely have the opportunity to extend his term for another 5 years, but he's already chosen some successors. So Jamie's time at Chase may be coming to an end very soon. Do you guys think it's about time that Jamie got out? Or do you think that Jamie was a phenomenal CEO? Comment that down below. Also, drop a like if you respect Jamie's devotion to banking. And of course, consider joining our Discord community to suggest future video ideas, and consider subscribing to see more questions logically answered. But until then, I'm Hari, and I'll see you guys on the next one.